Welcome to Beyond the Block, a Web3 focused podcast where in each episode we'll explore a topic impacting our industry. Joined by an esteemed industry colleague, we'll dive deep into how it's driving our businesses. This is, of course, all powered by Kadena, the only truly scalable Layer 1 proof of work blockchain. Let's dive in.
Hello. Welcome back. This is another episode of Beyond the Block. I'm Annelise Osborne, the Chief Business Officer here at Kadena, and I have an amazing guest. Alana Ackerson has just joined our board of advisors. So Alana, thank you so much for joining us today.
Oh, so excited to be part of this project. Can't wait to get going.
Love it. Alana is like a mentor to me, so I really appreciate it. I'm so impressed with all that you have done and accomplished in your career thus far, and you're just getting started. On that note, can you share kind of what you've done, amazing career experiences, and kind of tell us about your journey?
Yeah, happy to. I started in TradFi, as many of us did, and a friend connected me to Peter Thiel's early team. He was just rolling out of eBay. They had sold PayPal, and he was setting up a global macro hedge fund to begin to invest a lot of his capital into global markets based on his outlook of the world. And so I actually had a great opportunity pretty much right out of college to be on the trading floor with some, individuals who've gone on to start, pretty incredible investment firms like Kenny Howry and Founders Fund, Joe Lonsdale and 8VC, Ajay Royan and Mithril. So just a really rich environment in those early days. And I was with Clarion for a few years. We raised a great deal of capital, made some pretty interesting calls. We're very early to talk about the upcoming housing crash in 2008. And, while I was there, I got to know the broader ecosystem and was introduced to Mike Cagney, who was rolling out of Wells Fargo. He was a prop trader there and was setting up a new macro hedge fund. And he was looking for a partner to come in and build the business with him. And so that was the beginning of multiple tours of duty with Mike. We've had a lot of fun together over the years. In 2011, he came and we were kind of building the next wave of the fund we were running, Cabazon, into a broader asset management platform, new products, new reach. And he said, you know what, I have this idea that I've been percolating on, but I promise it's just going to be 5% of my time, right? And Mike, like I am, he's very easily excitable, right? When he sees an interesting dislocation in the market, right? Which I think many of us who and many people who are listening to this probably can relate to that. It's hard to not want to jump and find a solution for it and take advantage of that. And it turned out that his idea was SoFi. He had been looking at the student loan refinancing market and thought, there really is an opportunity for innovation here. Why don't we create a new model for lending in this space? And so SoFi took off. I ended up joining as part of the early team there, left for a little while. And in 2014, Peter Thiel actually called me back up to say he wanted to do some new things with his private foundation, which focused on early stage investing in scientific and technological breakthroughs coming out of universities and, entrepreneurs who were quitting college to start something new. So really, really interesting projects. And so I joined as CEO and did some work there. And in 2017, Mike Cagney called me back to say, we're building out an asset management business at SoFi. So a lot of toggling back and forth with, when you find partners that really make you stretch, right? I always, one of my favorite quotes is, if you're the smartest person in the room, you're in the wrong room, right? I always want to be surrounding myself with people who really make me stretch. And so Mike said, look, we're going to build out an asset management business at SoFi. Obviously the lending business is going incredibly well. They had just started wealth and some of the other, kind of lines of the business and had a very robust capital markets desk, but wanted to think about starting to productize some of the assets. And so I joined and he ended up exiting that year. And we were grabbing a drink and he said, so I've been thinking about blockchain. And this is fall of 2017, which Doesn't sound like that long ago, but as you know, in the world of digital assets was like an age of man ago.
Mm-hmm.
And he said, I'm looking at some of the projects that are active right now, and they're all fairly theoretical exercises. No one has identified a clear use case that is commercially viable, that would even have a chance of getting the attention of traditional TradFi players. And I think it's a missed opportunity. I think we should build a blockchain for originating and securitizing financial instruments. And I said, okay, how do we do that? And he had this great idea to essentially build another consumer lending company, because that was what we knew, right? He and I and the early team knew that very well, and pointing that origination and underwriting engine at HELOCs, right? A little bit different. And so we founded Figure Technologies in the fall of 2017, and spent that first year, 2017, 2018, building up the lending business. Moved very quickly. Definitely the fastest build of my career. I think we went from 5 of us around a kitchen table to 300 employees, multiple product launches, multiple offices, 1.2 billion valuation, leader in the space within 2 years. I mean, just really rapid growth. And a lot of fun. When I was ready to transition out and take a breath, he and I grabbed drinks again, and I said, I think it might be time. And then COVID hit right away. So instead of the meme of Homer Simpson backing into the hedges, and just kind of taking his leave, I ended up having to stay a little bit longer to transition the team to all work remote, which was a lift, I think, for a lot of companies that weren't first remote to make that change during COVID. And I took a few months off, considering a change over to the venture capital side of things. And Barry Silbert, who was one of our earliest investors at Figure, he called me up and he said, I'm thinking about building a new subsidiary. Would you like to come out and build it up and run it? And so that was the catalyst for my shift from 20 years in Silicon Valley to Connecticut and the New York area. And so I joined Digital Currency Group and built up the subsidiary. And then, unfortunately, FTX happened. The ripple effects through the industry, as you remember, were pretty significant. And, DCG made the right decision to really refocus on core business, core areas of expertise. So we, Barry and I decided that this as an extension it wasn't the right timing. Right. So we were about ready to go to market with it, but the industry, the audience wasn't there in the same way. So we wound it down. And now I'm at Connecticut Innovations, which is the strategic venture arm for the state. And I got here because I got to know the CI team pretty well when I was at DCG, just fantastic people. And so now I spend my time looking at both early stage companies, and I primarily focus on Fintech, and also on advanced manufacturing and different infrastructure plays. Anywhere where I see someone is challenging the existing systems and structures of how we do things and are looking to kind of reform that and create a new path. And then I've been there since early this year.
Very exciting. So I love it. I'm really in awe of your ability to scale and grow companies. And so, and I really look forward to your help at Kadena as we continue to grow. So can you talk a little bit about that and kind of what you've learned and some key takeaways in growing companies?
Yeah, I think one of the things that I learned to be at Stanford and, has kind of followed me is to be a systems thinker. And this was something, that we spent time on, at Clarium. And obviously, anytime you're doing global macro investing, you're looking for significant dislocations in the market that other people are missing. And it was actually something that Mike Cagney was great at. And it's unusual to find an individual who is both a shrewd trader, right, knows how to execute, but also is a keen macro thinker, and being able to translate one into the other, right? You find a lot of people in the hedge fund world and the investment world at large where, those two things don't coexist in a incredibly harmonious way. And so That was one of the ways that we were able to see the potential for blockchain in financial services when others were still skeptical, right? And so, I think the systems thinking influenced our approach at Figure when we were building up, right? We wanted to build a comprehensive ecosystem, and we wanted to build provenance blockchain alongside Figure as we were going. And so that was, that design was a key part of being able to build for scale, right? Understanding how the different pieces kind of come together and complement each other and fill in the gaps. The other thing about building and scaling is thinking about true value creation, right? So, one of the things that we focused on at the Thiel Foundation was thinking about where we could create entirely new markets, right? Or entirely new products that didn't exist, instead of incremental iterations on something that already, lives in the market. And so instead of competing and going head to head with incumbents, right, which there's value in doing, you pretty much just change the game altogether, right? You say, there are assumptions being made about how we do things, and those assumptions may not have to hold here, right? And so I think that's how, some of the work that we're now doing in digital assets and blockchain is going to be able to transform financial services, not because we're out competing directly, right, but because we're creating a new path for what we would value in a system, right? Efficiency, transparency, good resource allocation, those characteristics that make for a much more robust system than we have now. So, as an investor, I look for founders who aren't necessarily jumping into existing markets and looking for those tweaks, but who are fundamentally reshaping them.
Sure. So it's super interesting listening to Provenance and Figure. I guess the story, I've had tremendous respect for what Mike Cagney and June and yourself as well have built. So it's super interesting. So what about kind of parallels that you could bring for like with that idea with Kadena? We're looking at kind of obviously expanding to institutions. We were created by two JP Morgan gentlemen, programmers.
Yep.
And we're really looking to expand into a similar space that a different chain, slightly different setup than Provenance, but still we're looking to make capital markets more efficient, which is what Figure and Provenance do as well. Any takeaways for that you could share that you learned there? And then of course, then I will take that into Kadena.
Well, for, one of the things that we did and was, and this, it's a very simple but very important thing, which is, identify the critical gap, identify the problem you're trying to solve. And for us, it was the need for a more efficient, more streamlined way of originating and financing and securitizing loans, right? Due to all the high costs and inefficiencies, lengthy settlement times. And so we laser focused on that. And, we knew you could build a blockchain fit for purpose. And so we, began with loan origination and servicing, asset securitization, real-time settlement. And, we took the perspective we needed to partner closely with regulatory agencies, right? And we got some pretty good outcomes from that. And, by last year, we had facilitated probably north of 12 billion in transactions, right? So, from that, it's thinking about, okay, how do you, with Kadena, raise awareness of the unique scalability advantages, right? To drive adoption in financial services, which is the challenge we faced when we were building Provenance. I've seen lots of people who are building, on top of layers, and for me, one of the reasons why I was most excited to join this project was, the throughput. I think Kadena has significantly higher transaction throughput compared to what I've seen others working on interesting projects in the space struggle with different layer one platforms. And so it opens up some really interesting applications. And there are some noisy spaces in the market right now where you see a lot of people trying to build and innovate, particularly when it comes to partnering with banks. And I think that there are some really interesting pockets in financial services that really haven't explored the potential of blockchain application. And so I think there's a real opportunity there. And also, one of the things for scaling a company is, strategic partnerships. And Kadena has been phenomenal at identifying the right partners, right, to expand reach and capabilities. And I know we've got some exciting things coming up in the next few months. It's having a clear, like I mentioned, a clear regulatory strategy. We're coming into an election. We're in the middle of an election cycle. And so there'll be some interesting things shaking out one way or the other in the next month. And then we'll get, new line of sight on what comes next in the space. And, it's the team. So you'll always hear me talk about team quite a bit, fostering a culture of innovation. The Kadena team, the origin story is phenomenal. The intention that the team holds for what can be done here is really inspiring. And so anytime you get to work with people who are manifesting something that is exciting and transformative, it's great to be invited in to be part of that.
Well, thanks for joining us. What about this, the public and private blockchain? So I recognize that Provenance was initially private and then kind of expanded to public. Can you talk us through kind of the idea of public and private chains?
Yeah. So, the market it's always rapidly expanding and it's almost like it's breathing. There are all sorts of different ebbs and flows to what we're identifying at any point in time is the real need, the real appetite, and you're always asking yourself, what is the win here, right? What are we optimizing for? And that means you'll change strategy quite a bit, and you're now seeing some interesting institutional interest in the space. I think that, if you are able to identify the slice of the market that you're going to stay in and you're going to win in over time very early, it is possible to always have a clear course along the way as to exactly what the build will look like. If you're very early in a market, it probably is going to mean that you're going to test things out, right? Kind of tiny bets along the way. And you see this with most of the transformational companies in the digital asset space. Many of them made little bets along the way. They gathered information. They got the reaction from the market. They listened to institutional investors. They bobbed and weaved with the regulatory environment, and they course corrected. And those are going to be the strongest founders, the strongest operators, is being able to decide, okay, we set out thinking this was going to be, say, a private blockchain. But based on where we think the wins are, where we can really have an impact, where we're getting traction, based on sort of the design work we've done around the space, we may want to make a shift. And you're seeing really interesting projects in both areas.
So you're with founders a lot. Are there interesting projects? Do you have Web3 projects that you're looking at, or kind of what are you surprised at that you're seeing, and where do you see the new innovation?
Yeah, I think, I was really fortunate that when I was with DCG, I was spending a lot of time with the CEOs and founders of, most of the major blockchain, Web3, DeFi companies that are being built. They're visionary thinkers. They have interesting strategic insights on where the opportunities are. They're always thinking about what's possible. It's gripping, right? And they are actively willing a new process for finance. We're seeing a lot on tokenization, as everybody knows right now. We're seeing a lot on interesting new marketplaces, right? I remain really excited about fractionalization of assets. I think that one of the things that, from a trend perspective, and one of the things that is coming up in Fintech that I'm spending a lot of time looking at, is how we're going to be able to personalize finance at a very minute level over time, right? And so the intersection of fractional ownership and personalized finance, I think customizing and fine-tuning different exposures at the most granular level is really compelling. And so there are a lot of companies that I'm looking at who are focused on those areas and the intersection of those areas. And I think we're going to see some really cool projects come out of there.
That's so interesting. I was going to ask you next about kind of real world assets, which really goes into fractionalization. Can you talk a little bit about kind of how you see that future evolving?
Yeah, I've spent some time in that space. And I do, and again, very noisy right now. A lot of people talking about it. And that's because much like we talk about Bitcoin maximalists, I probably am in the camp of, a lot, if not most things, can get tokenized in interesting ways. And that's the way the market is going to be moving because of those characteristics of it that we value, right? And so I see that fractional ownership piece really becoming dominant.
And the next step for the tailored investment portfolios, which really is kind of more for retail, I'm guessing, for retail investors. Can you
Yeah, it can be. Although you're starting to see institutional portfolios being developed where, based on the prevailing, investment mandate or policy, being able to come in and really engineer certain outcomes is a great new step for their advisors and their investment committees.
What about tokenization of treasuries? Kind of where do you see that market going? What are the use cases for tokenized treasuries? Do you see that expanding to other countries? What are your thoughts?
Yeah, I mean, and some of the recent activities by some of the big guys in the space like BlackRock and Coinbase, a lot of institutional interest there. And this is an area that I actually think, Kadena can shine because of that high throughput. There are a lot of large scale projects, right, that we are taking on and that we will be taking on, because this is an area where you really care about reducing settlement times, right, to be near instantaneous and increasing global accessibility. Because I think, global interest in U.S. Treasuries remains and has, been sustained over many, many years. And, you're also seeing some really interesting things going on. And this goes to some of the work that I've done at the Council on Foreign Relations. We spent a lot of time looking at, central bank digital currencies and what might happen there and which countries are making which moves and what the implications are. And, it's when you take a step back and you realize that, over 90% of the global economy is represented by countries who are actively pursuing, building in, looking for the right use cases for their own CBDC. We feel like we're at sort of the precipice of something really transformational happening. And you see several fairly low income countries participating, right? Because of a lot of the mechanisms that they can achieve with CBCDs. It's kind of a fun tongue twister. But, it gives us new tools for managing the economy, for creating stimulus payments, remittances. It's amazing what opens up when we start to do this work. Now, of course, part of the analysis that we do is also looking at some of the things that we have to hold in tension, right? Not just the benefits. As everything we do with technology does not exist in a vacuum. Any new tool or process that we implement, it is imbued with an intention, right? It is an expression of what we are hoping for as a society. And, it opens up opportunities for abuse. It opens up opportunities for new dislocations, right? For everyone we kind of solve for that, we can open up kind of a new dislocation. And so, with the rise of CBDCs, the concentration of power, data, risk within a central bank or entity, we can obviously really compromise privacy and security. And so these are, sort of complex systems to be moving levers on at the same time.
What do you think about CBDC versus stablecoin? So if we're talking about some countries that have less or that have more volatile
Right.
currencies.
Right.
The idea of having, holding Bitcoin, for example, or some sort of cryptocurrency or a USDC, compared to the CBDCs.
So, we've seen mixed results, right? From, certain countries pursuing a dominant crypto strategy, stable coin or otherwise. I think it's a really rich debate. I think we can see a few different outcomes. I think it depends on the region of the world. I think it depends on what they're optimizing for. I think it depends on the relationship between whatever prevailing, sort of coin is and the existing institutions and what they're doing, right? So again, it's a really big system with multiple levers, and so it can be challenging to navigate because what you're doing is you're constantly thinking about different incentives. You're constantly thinking about human nature and activity. You're constantly thinking about what will incumbents do. So it's definitely kind of one of the most exciting chessboards to be playing on right now.
Sure. So you touched on privacy. We have a ZK bridge coming in Q1, early Q1. We're super excited about figuring out how we can work within privacy within on chain. What are your thoughts about privacy?
Again, you'll find I typically am someone who is looking for the gray, right, and looking for the nuance as opposed to dogmatically holding to one side or another, because very little is black and white in the world, right? And so when it comes to privacy issues, I think that it's not just one bucket as a topic. I think there are different categories of privacy, and they need to be weighed in different ways. And so, privacy for certain financial transactions versus identity issues. And those are obviously intertwined, right? But I want to optimize for certain things when it comes to my identity online or on chain and different pieces of my identity and my control and being able to turn some of those pieces on and off, versus thinking about privacy on a transactional basis, if that makes sense. So there are a few different ways to cut it. But I think that protocols continuing to develop the sophisticated way that they approach privacy is very exciting. As we've talked about, it's proactive engagement with regulators on what needs to be optimized for, and what the trade-offs are. I think is very important.
Sure, I think there's a lot of different things to touch when you touch privacy. I would hope you have some digital identity startups that you're looking at too.
It is a very rich space. Obviously there are countless solutions being built for financial services in terms of cybersecurity on the institutional level. And so that's really exciting to see, particularly when you bring in AI applications and blockchain. Again, a lot of churn in the space, a lot of activity, but there are some great projects. It's still a pretty lightweight on the consumer side. You have a couple companies that have done a fair amount of work on one slice, like password protection. But there isn't really a comprehensive solution for an individual to feel like they really own their data, right? Top to bottom. They own their data. They can permission their data at will. I think this is obviously where blockchain can do quite a bit.
No, I agree. What about the regulatory landscape? It's hard to think in the US on any of these when we're talking about securities or institutions without thinking about regulation.
Yeah.
What are your thoughts on current regulation, where we're going to go, and optimistically, for growth?
I will be an optimist after November, when I can anchor to something directionally. I think it's always hard when you lead up to an election to see how much people are sort of withdrawing a bit and putting things on hold, and just inertia from waiting to know kind of what the next 4 years brings. But I think, participating in industry groups that help shape balanced regulations, it seems like such a simple thing. But most of the companies that I've been a part of building or directing in the space have been very active there and have again, seen really good results, right? From a collaborative effort, a consortium that can come in and with one voice and really educate. And that's really what it is always. It's about the education. People want to make good choices. People want to be informed. But in the absence of that, you have views that sort of percolate that really are in response to emotion, and are in response to there being a vacuum around understanding, right? So proactive engagement with regulators, regardless of the administration, is always incredibly important.
What about, you had mentioned, and I'm bringing this back to kind of Kadena and us, like partnerships. So we're really working on partnerships, strategic partnerships. You had mentioned, your experience previously. How did you find your partners? Who do you think we should partner? Like where do you see partnerships kind of as our next steps?
Yeah, so we, it's always thinking. So most companies I've been involved with, you actually do start, and it may not seem like an intuitive thing. You really start with the underlying customer, right? So as we're building within, for financial institutions and banks, it's thinking about the underlying customer and what they care about. What's funny is we realized really quickly at Figure that we really shouldn't talk about, and again, this was 2017, 2018, we shouldn't mention blockchain, right? Because it was introducing complexity that wasn't necessary to the story. And actually how, the skunk works of it all wasn't something that was going to add value to the consumer. Talking about, being able to approve them in 5 minutes, right? And fund them in 5 days. And that we were originating their loans on chain. So it was a seamless process. It was about what the results were and what the benefits were, not about the technology itself. So that was something that we learned pretty quickly. But when you start to think about the end user, then you can engage with partners in a really rich way, right? You can come and you can say, okay, you're a bank, and while your digital innovation team gets really excited about the intricacies of the technology and all of the back-end efficiencies. If you're not able then to engage the product team, right, or the customer facing team on where the value is, right, why the customer would care, you see a breakdown. You see interesting POCs. You see kind of an initial adoption, but no utilization. Right? It doesn't get pulled through. You see a lot of these projects kind of sit orphaned within banks or large asset managers, not because they didn't see the value, but because there was nobody on the ground to do the translation over time, to look for implementation in areas across these institutions, right? Who goes in and sits down with the private banking team, with the asset manager team, right? With the different fund managers. And so that's really the disconnect. It's not necessarily getting in the door. It's not arguing the value proposition. It's then going and doing the hard work of the translation into areas where people care. And so, we've always identified partners who've had people who, want to do the work, both, from the intellectual exercise side of things, but also very clearly see the real world application and the benefits for their customers. So when we did the first securitization of a loan on chain, it was a $150 million securitization that we did with Jefferies and Nomura. And they were fantastic partners for that. And we did everything from the origination of the loans to the issuance of the bonds, and then obviously the servicing of the monthly payments over time on provenance. And so it was a really great partnership with those banks, and we always had really great investors who understood the value, right, over time, like Ribbit and Morgan Creek. And so, you have to think about partnerships as an ecosystem, because it's reinforcing in the conversations that you're having between investors, between the various institutions, so that you can build something that can really have scale and import and impact.
A more specific question: when you did your securitization, it was all natively digital loans. So I'm asked about opportunities for doing the bonds at a tokenized level, but if the native assets underneath it aren't natively digital if they're paper-based, they're, traditional. Do you see that? Would that work?
Absolutely. Right. So you do the data capture digitally, the hashing, the blockchain recording. It does seem like it is hard for a lot of people to wrap their head around. Wait, but doesn't this all exist on a piece of paper, right? The loan terms, the details, the documentation, and you can actually capture all of that digitally at the beginning. And then, do the smart contract creation simultaneously. And then the life of the loan exists purely on chain, right? And so the loan is essentially tokenized at that point. It's represented by its hash and its smart contract. And, you can decide what you need to do in terms of off-chain storage, and different institutions have different reporting requirements and data management requirements, right? But then they can always rely on the blockchain for the immutable record of that asset, right? Because you did originate on chain.
This is a, when code is lost sort of thing, because I think everything right now, we have documents and legal off of in still paper format. So
Yeah,
I feel like we're in that in-between stage before we get to be fully digital.
and honestly, the use case that I was most excited about, that we did spend time on very early on at Figure and with Provenance, is title insurance being an area that needed disruption, right? You pay several $1,000s for title insurance, and really what exists is a single piece of paper at, sort of the bursar's office. And it's really kind of amazing that we haven't moved away from that. So title on chain, is a great example of something that, was always paper based, and there's no real reason for it.
I feel some other countries will be easier to shift their title on chain. I will also tell you that at your securitization, I read through the documents to see what you did about title. And it was more or less a representation, I believe.
Yeah. So again, back in, when we were starting all of this, very early days, it was going, county by county to have conversations with people, to understand the existing processes, to understand, who the stakeholders were, understand where the pain points were. Obviously it's come a long way since we started out. We were probably one of the very first to have those conversations. And it was exciting. There was a lot of promise in it. But then, of course, with anything, you have to make choices about where you focus. And if you're going to do a heavy lift, you can't then pursue every interesting opportunity that you could tackle.
That's true. Otherwise, you're chasing, rabbit
the editing
holes.
Process, so frustrating. You really, if you're someone who wants to, again, have that impact and that reach, it's hard not to chase after a lot of different things at once.
Sure. So kind of with title, with all of these things, it's interesting to think kind of, 2, 5, 10 years in advance where we're going to be. We're not going to talk about blockchain. Life's going to be more efficient, just like electronic trading is so much more efficient, right, than it used to be. Look at the floor of the New York Stock Exchange compared to where we were 20 years ago.
Yeah.
So the future of financial technology, I know that you have discussed this before. Where do you kind of see us in 5 years? Like, where do you see the fintech sector becoming more efficient in 5 years?
So I'm gonna describe something that isn't as technical as it is about the experiential, right? Because a lot of people want to say they have a crystal ball on where payments are going, on sort of where portfolio construction on the asset management side is going, all the the CFO tech stack, and all of that will continue to evolve. There's still wins there, but I think one of the things that we have not yet really tackled is the financial services being a smooth, streamlined, user-friendly experience for people. And I think that's where the customization comes in, the personalization comes in, creating tools that are much more intuitive and an extension of our regular workflows outside of managing that part of our life, an extension of how we normally tackle projects and how we think about things analytically. And so you're going to see more of a convergence there. But it will start with that personalization that I was mentioning earlier.
The last thing I have to ask you is really about decentralized finance. So your thought process on decentralized finance, how you think that will mix with traditional finance. Like, do you see the two merging? Do you see a future in DeFi? I mean, DeFi is really pretty amazing that it was created by all of these hoodies, and kind of the way that I look at it is almost against the financial system, but I see so many similarities in decentralized finance and centralized finance, like how they've in traditional finance, like what they've created.
And this is what I love so much about your book is, the way that it illuminates those two different perspectives and the synergies, right? And how we're getting to that integration. I do think that decentralized finance is going to become more and more dominant, but it's going to evolve. It's not going to look exactly as it does now. It's going to have a slightly different set of intentions and levers around it. But I am definitely looking forward to more of the values being pulled through how we're doing traditional finance. And I think a lot of it, as I said, depends on education, depends on real world use cases, depends on thinking about the end user, depends on people carving out mind share to actually create the need for things from a product perspective and not just a tech perspective, right? So doing that translation and pulling it through, just tons of opportunity there.
Super exciting. Well, I really appreciate your time today. This has been an amazing conversation. I'm so looking forward to spending more time with you working and building and growing Kadena. And thank you, Alana. I appreciate it.
It's a phenomenal team you've put together. And I am really excited for what's on deck for the next 12 months. Thank you for having me.